thinking of incorporating your business? You're not alone. Whether you're a successful freelancer, small business owner, or high-earning consultant, you've probably wondered. I've been there. In the past, I've operated as both a sole proprietor and through an incorporated business. So I know firsthand the financial questions and decisions that comes with each. In this video, I'll walk you through what I've learned along the way, especially from a financial perspective. Hi, I'm Sally, a licensed financial advisor. Let's get started. What does it mean to incorporate? Before we dive into the money talk, let's define incorporation. When you incorporate, you're creating a separate legal entity. This corporation can earn income, pay taxes, hold investments, and distribute money to you, the shareholder, through salaries or dividend. So why does this matter? Because your money moves differently inside a corporation. The tax advantage, maybe. Here's the big one, tax deferral. As a sole proprietor, you're taxed personally on every dollar you earn at your personal income tax rates, which in Canada can go over 50% in high brackets. If your business is a Canadian-controlled private corporation, the first $500,000 of active business income is actually taxed at the small business rate, which is around 12 to 13% depending on your province. Now that's a big tax deferral advantage if you don't need all your money right away. Let's do an example. Let's say you earn $150,000. As a sole proprietor, you might owe around $40,000 to $50,000 in taxes. However, as a corporation, the corporation pays approximately $20,000 in corporate tax on that $150,000, assuming you qualify for the small business rate. And the rest can actually stay in your company. You don't pay personal tax on that money until you withdraw it as a salary or dividend. And that's the tax deferral. So if you're spending everything you earn, incorporation may not help. But if you're leaving money in the business, you could save a lot. How do you pay yourself? Once you have a corporation, you're technically no longer just you. You're a shareholder and maybe an employee too. There are two main ways to pay yourself. One, salary, and two, dividends. For salary, know that this is a tax-deductible expense for the corporation. It can help you build your personal RRSP contribution room. You will pay into CPP, the Canadian Pension Plan, and you will have to pay your personal income tax on that salary. If you're paying yourself with dividends, this is not a corporate expense. It is paid with after-tax corporate profits. There will be no contribution to CPP and no RRSP room built up. But this is typically taxed at a lower personal bracket, but it really depends on your total income. Know that many business owners actually use a mix of both, a salary for steady income and RRSP room, and dividends for flexibility and tax efficiency. Investing inside a corporation. So let's say you've incorporated, paid your business expenses, and cover your salary or dividends, but you've still got money in the corporation. Now what? Here's where things get interesting, because your corporation can invest that leftover money. This means you can use corporate funds to invest in stocks, ETFs, mutual funds, real estate, or even other companies. But this is a big one. Investment income earned inside a corporation is taxed very differently than active business income and will require a whole strategy on its own. Hidden costs and paperwork. Let's be real, incorporation comes with overhead. This can include annual corporate tax returns, bookkeeping requirements, higher accounting fees, and possibly ongoing legal and compliance obligations. These aren't deal breakers, but they do add cost and complexity. You'll want a good accountant on your team. Think about it like this. Incorporation is a tool, not a trophy. It should work for you and your goals, not just make you feel like it's official. When incorporation makes sense. So who should be considering incorporating? One, if you're earning more than you need to live on. Two, you want to reinvest or invest the profits. Three, you're in a high personal tax bracket. Or four, you're building a brand or business you might want to sell one day. Incorporation is also essential if you want to grow your business or bring in partners or shareholders. Incorporation can be a powerful financial strategy, but only if it matches your life and business goals. And here's the thing, no two solutions are the same. Before you incorporate, it's wise to speak with a qualified professional who can run the numbers and help you map out the best structure for your goals. Incorporation is a strategic tool, not a one-size-fits-all solution. When used right, it can open up powerful planning opportunities. If you have questions or want help reviewing your plan, feel free to reach out for a free consultation. Details are in the description box below. We're on a journey to building a community of money-smart individuals. If this video helped you, please like, share, and subscribe. We'll see you next time.